this thing about the financial planning, no, the forecasting is nothing but the strategic planning that you have in your schools, no? But this time, if you are the CFO, the finance officer, the treasurer, your point of view is different. So you are there, part of the planning, but you are concentrating on the financial impact, no? On the financial aspect. No? So how do you normally do that? In a strategic planning, again, you review if you have time. I don't know how often you do this, but on let's say after every 3 years. But for sure, many schools do it every year. But as far as mission, vision, values, you seldom review it every year, no? And I don't know if you will change it accordingly. The mission, considering the current situation. So in a strategic plan or planning exercise, what you do there, normally this is generic steps, no? And I just enumerated it quickly in here. You do SWOT analysis. By doing SWOT, you are actually, this is the strength, weaknesses, opportunities, and threat. Now, the aspect of opportunities and threat, they refer to external analysis. No? So you look at the environment. What has happened to the education picture, situation right now with the COVID-19? So it's significantly different now. So the way of doing business, education, quote unquote business, is different now. Whether we like it or not, it is just like that, no? And again, if you are not so quick, so, you know, responsive, then you will be left there, no? Sabi nga nila, baka maiwan sa, pupulutin sa kangkungan, no? Hindi talaga, kasi whether we like it or not, andyan din yung, ano eh, yung tinatawag nilang game theory. What if I do this? Will my competitor do it also, or will not do it? What if, no? The what if. So you scan the environment, you scan the external, you scan what's happening. Dep Ed, Ched. Look at your association. Cocopeia, very active. PASCO, PACU, ACSC, you know, the technical vocational schools, TVES, I think. And even that, I heard that you PAPSA, the Federation of School Administrators. I know some of you could be members of that. PAPSA, I think, Federation of Associations of School Administrators. I was listening to the president, I forgot his name. I don't know, some of you could be members of that. Now, I don't know, this could help, no? If also if there are interested administrators there who are not members of SEA, who may want to, let's say, listen to this webinar, I am willing to do this seminar for them. For them, kung meron lang kayong connection, any member of them, this is for free, no commitment whatsoever. This is one contribution of our company, and this is in line with our advocacy, being a partner of SEAP and Maris, no? So that one. So you scan the external environment, what has happened, and look at your school, introspection. What are your school's capability? What is your situation? What are your strengths? What are your weaknesses? Now, you concentrate on the financial aspect, no? So from there, actually, you would know if, let's say, the in-thing now is to go flexible learning. But can you do it? Is that your core competence? What is your core competence? Would just be settling in, let's say, blended learning, or just wait and until things normalize and the pre-COVID situation would come back, and then that's the only time we return to our usual activities. Now, I don't know, what is your core competence? So what are your strengths? What make you different? The strategic advantage. You know that book of this famous what's the name? Strategic Advantage and Competitive Strategy. No, I think some of you read that book by. It's a required reading for MBA and what's his name? I forgot his name. I read that many times. No, so external, internal. So from there, you identify your strengths, and also at the same time, you have to address your weaknesses. No, if you are weak in this area, how can we implement? How can we go and approve that project? No, so you come up with your school objectives. Only then, after you do SWOT analysis, external, internal, you delve on your core competence, your strengths, and you also address your weaknesses. No, so this could be could be a few hours, no, and come up with a school objective. What is the objective? It's financial. Let's say 2020-21 school year, we will increase our enrollment by 10%. That is an objective, measurable. Or objective is we will maintain the previous school year's level of enrollment, zero growth in terms of enrollment. Or if the owners of the school will tell it, so we should aim 10% ROI, return on equity, return on asset. No? So year by year, and on the third year, we should be earning 30% by that time. So it's an objective. It's a school objective. Now, just like any other objective, it should be specific. It should be measurable. It should be attainable. It should be realistic. It should be time bound. No. So this thing about your ambition without a plan is just like a wish. No. You really have to operationalize it, and there should be a way to do it. No. So that's the school objective. I mentioned very concretely, must be measurable in the first place. So that after coming up with your school objective, let's say for the next school year and the next 2 years, 3 years, and so on. And then, let's say, increase enrollment by 10%, no? Every year. If that is your objective, what are the strategies in order to achieve that on a yearly basis? So, you craft strategies, you come up with strategies that would support, that would achieve your objectives. Financially, in nature, because that's your contribution as a finance person. So there will be people in the team who are into marketing and promotion, or who is good in strategy. One is good in HR or human resource. One is good in operations. And there could be a representative, the principal of high school or elementary, or the head of the college, the school of whatever, school of economics, a school of business, so on, or represented, no? So in crafting strategies should always be aligned to the objective. So otherwise, you will be wasting time doing particular strategies. No? And then each strategy, let's say one strategy is to go, let's say, we will do marketing promotion in order, and then we send out emails to parents, students. So it could be a strategy to increase your presence. And how do you do that strategy? You implement it. So that is just one of them. No? There could be other strategies like reviewing your expenses and looking at areas where you can save. No? It's another strategy. And each strategy should be implemented, should be acted upon using specific action plan. So how can you do an aggressive advertising campaign? How can you cut more on expenses by so much so that later we can achieve a 10% growth or income? No? So Tactics are there to support strategies. Strategies are there to achieve the objective. So all of these three should be aligned. That is what I'm telling my advices and my, you know, when I speak, I sit in the panel of panelists, no, of defense, no, an MBA or a strategic paper. So they do this, no, before they graduate to get their executive MBA degree. Yeah, so I got myself involved to more than 50 of this. So I zero it on the financial aspect because that's my line, but this is how they do it. And this is how AIM is doing it. All graduates of AIM, they produce this management research paper, you know, not thesis. So they go through this process, no? And then at the end of the day, you see, you do financial forecasting. You see whether you achieve the objective, no? You use financial projections in this topic that we are in right now. This is what is exactly is being done to do financial projections. You estimate what are the assets or additional funds needed, all of them, no? And then at the end of the day, on a regular basis, you monitor your strategic plan. No? You check your plan. Are you in line? Or, yeah, is it on time? No? At this point in time, it should have been like this. X% should have been accomplished, no? Something like that. You review. And if, let's say, there are significant deviation from your assumptions, it's worthwhile reviewing, adjusting your plan. No? Anyway, that's how to do it in general, even if you are not into finance. That's how you do strategic planning. But then there is this thing about doing it, financial planning and forecasting. So in here, okay, this is so important, no? Just like any other function, the school finance officer, he or she needs to manage well the financial resources of the school. That's the bottom line, no? Must invest the school's funds, short-term and long-term funds, in order to maximize returns and minimize risk at the same time. So that's aligned also in the Philippine Catholic School Standards, the principles, no? For example, if I were to ask you right away, where do you put your money? Where do you put this type of funds that you have? So your surplus cash, no? We did cash management. We saw that this is very possible. And how about your short-term money? The ones you collected every day, no? And so on. And how about your long-term funds? Where do you put your retirement funds? Where do you put your endowment funds, no? I will use there. Cooperative funds, no? Many schools have cooperatives. Even the cooperatives, after they have served all the members, they still have money left there undeployed. And rather than the money lying around or just in the savings account, then it should be deployed, should be invested. So it's the duty. This is one hat, so to speak, that a finance officer should be wearing. So you wear the capital budgeting hat, you wear the cash management hat, you wear the financial analyst hat, and you wear the portfolio manager's hat, investment management hat, manager. So how about your teachers and employees savings, other funds? You know better, there could be other funds there, no? But the thing is, how should you, no? Now, just like in any other topics, there is science to portfolio management, and there is a process. This is how to do it properly, because many finance people, there's no direction, or as if there is no science, no? There is really no science in the way they do investment management. No? And even in Harvard, even in graduate schools of different schools in the country and in the whole world, they have, when it comes to portfolio and investment management, you really have to do these things. No, the first thing that you should do is to come up with this document called investment policy statement. Not really as formal a document. No, you can just put it on a piece of paper. Then it specifies your school's investment goals and the acceptable risk level that you can absorb. What are your goals? No, if let's say your retirement fund, you would want to earn, let's say, 8% per annum. It's a goal. And at what level are you willing also to invest it in stocks or in fixed income instrument only? Or are you just comfortable investing it in time deposit and other money market instruments? No? So you have to review, ask yourself. Again, this could be part of your strategic planning, or this could be an ad hoc committee for the financial aspect of the school's operation. And just like any other plans, there could be some changes. So this should be reviewed because sometimes the goal is not achieved because a particular assumption is so, optimistic and it's not reasonable. Remember the objective, SMART, no? The reasonable, no? Is one of the characteristics. It guides all investment decisions. Rather than having nothing, just relying on your gut feel, on your, whims and caprices, there is a science. If it's not found in the policy statement, then by all means should be rejected. If you come across this proposal, invest in here, it's outside of your goals, outside of your acceptable risk level. Right away, you have an objective basis to reject it or to accept it because you have very clear in your mind, you have this investment policy statement. And then other than that, so what does it take to become an investment and portfolio manager? So you should be knowing this. You should know and review your current current financial and economic conditions. You should know what's happening to our country, to the whole world. No? You should know macroeconomics. So what's the impact of reducing the policy rate by 0.25%? What's the impact of having a negative interest rate or reducing the reserve requirements of the bank by 1%? By reducing it by 1%, freeing up 100 billion to the environment, to you as unavailable. And how many banks are there? And the reserve requirement was cut significantly from around 20, now at the level of 12%. Imagine that. So banks are awash with cash. They do not know where to put it. Take advantage of that. It's a tip. But then again, they would not relax their credit investigation and so on, because they are being monitored. The CAMEL's rating, they also have that. And they only have a limited amount should be deployed in loans or something like that. And the level of non-performing loans should be controlled, no? So you have to know that, the GDP of the country. So our GDP in the first quarter of 2020, do you know what it is? It's negative 0.2%. That's apparently a very small number, but it translated to hundreds of billions of pesos. For the first time in so many decades, Philippines got a negative quarterly GDP. And we expect even worse in the second quarter. It's ongoing. So after June 30 and July, it will be computed. The projection of economists, it's much, much worse. Then the third quarter will improve a little bit. We have containment of this virus in the fourth quarter. So at the end of 2020, what's the forecast of the economy? GDP will be very much small. It could be negative also, no? But that's very important, no? And you should know that because it has repercussions in your investments. How about the financial world, no? How about the financial markets? What's the stock market? What's the bond market doing? The level of interest rates. So After you considered all of that, you determine your strategies to meet the goals in here, as indicated in the policy statement. It requires monitoring and updating yourselves also of the economic, macroeconomic, uh, and global markets, capital markets. Monitoring, do you have that? Do you have that time? Do you have the capability? Yeah, that is what is required, no? Of a portfolio or investment manager. Anyway, so the next step is to construct. Only then, only after you consider the first two steps, should you consider constructing your investment portfolio. When you say portfolio, it is a basket, no? Just like a basket of grocery items, no? So it contains the different, let's say, financial assets, no? In terms, could be allocated in stocks or bonds. And in bonds, it could be in bank products or treasuries, government products. In stocks, it could be just in blue chip stocks or in other derivatives of that equities. Or it could be in managed funds like mutual funds, UITF, variable universal life. So only then should you allocate and produce or construct your portfolio. So in portfolio composition, one principle is diversification, not putting all the eggs in one basket. You spread the risk so that if something wrong happens with one asset, the others are not affected. So that's very basic principle, no? And also, of course, liquidity requirement. So when you need money, can you withdraw? Where can you withdraw from your portfolio? And then monitoring, evaluate your portfolio performance at the end of the year, monitor the institution's needs and market conditions. You update correspondingly the policy statement, no? Modify it accordingly. If the assumptions, if the environment don't actually happen as expected, no? Okay, so it's a dynamic process, no? So you do that before you craft your portfolio. It's presumed that you have done this, you have done that, and that's the only time you can create. You should create your portfolio. Remember, this would spell the difference between you possibly funding or not funding your projects. Because if you lose money in your investment, and that part of the investment is earmarked for the project, then that could be the end of your project. So again, review, and then if it is not good enough, perhaps your retirement ROI of 8% is too much because of prevailing interest rate. You can change it to, let's say, 6%. So that's how you do it. So are there significant changes in the economy, the social conditions, and so on and so forth? And then you change it. So it's a dynamic process. What I mean is your portfolio being a basket of securities, a basket of different investment outlets should then be just static. No. When there are changes, you should be active enough to change it, but not as frequent as daily, weekly, or not even monthly, quarterly, perhaps semi-annually, or at the very least, it should be done annually, no? Rebalancing your portfolio. So there are investment instruments. Where will you deploy your money? There are only a few investment outlets, no, here in the Philippines, no, government securities. You have the treasury bills, no. These days, the rates are so low, no, very low. You know, treasury bills, the 91-day 3 bills. We also have the 184 treasury bills, 364 days. We have treasury bonds, government issued, 5 years, 7, 15, 10 years, 20 years bonds with different coupon rates or interest rates, no? So you have also blue chip corporate notes and corporate bonds, no? The ones issued by Meralco, PLDT, BPI, Metrobank. Those big companies, they issue corporate notes. They borrow money and they pay interest to the lender in effect, no? Through this instrument called corporate notes or corporate bonds. They are also rated and by rating agencies. Or you might want to consider also investing in equities or stocks. So again, when we say stocks or equities, many people would shy away from this because they know the negative events that happen in here. Because some people would tend to speculate in the stock market. So they invest in second liners. So what do you call that? Very volatile companies, small companies, no? Not blue chip. And they are not actually investing. They are speculating, which is tantamount to gambling, no? That's why in the past it had this bad reputation. But equities is nothing but investing in a particular corporation. That's like when you invest in FEU, you buy one share of FEU at 900 pesos per share, you end up being an owner of FEU. So just like your mother congregation or the owners of your school infusing capital, in effect, you are actually investing in equity. They are investing in your school. No? So typical. I haven't updated this, but the numbers are much lower now. No, so these are just alternatives that you can invest and consider investing in. You can do it yourself. No, you can do it yourself, and I'm sure you also have people to do it. So corporate bonds, Ayala bonds, no, Meralco, PLDT, and so on. Now, I mentioned about stocks or company ownership. The only thing that you have to do and to be like, no, if you are to be good at it, no, is it requires something, no? It requires fundamental analysis. It requires technical analysis. So fundamental analysis, you study that one, maybe you have no problem, because what we have done in the financial analysis is precisely fundamental analysis. But we just studied here, we will be studying here the corporations that we are investing in the stock. No? That's fundamental analysis. We know the price-earnings ratio, it is too expensive, what is the EV/EBITDA ratio, what's the ROE, and so on. And when you have to do technical analysis also. If after fundamental analysis you identify the stocks, the timing, when to come in, at what price you would buy the stock. That's technical analysis. You do charting. You do all of this pattern, studying the support level, the resistance level, the Ichimoku analysis, the relative strength index. So it's highly sophisticated, if you do that. Because you should do both. Otherwise, even if you're very good at fundamental, if you're not good at technical, then something. And other than that, okay. So it takes time, patience, and expertise to do portfolio management, which is actually active investment management. No? Unless you do a buy and hold strategy, you buy now, forget about it. That's one strategy. Others would do the top-down strategy, bottom-up, and different strategies. So asset allocation, active asset allocation. So there are a lot of possible strategies in portfolio management, and you should identify one that should suit or fit your school's objective and risk profile. No? So having acknowledged that, so what do you have the time? You have the patience and expertise. No? Some would do it and they would just leave it to the experts. They would just leave it to the professionals, no? This is one alternative also. And yeah, we're talking about investment portfolio. We talk about managed funds. And for you to know, and I think you know that already, mutual funds. There is this investment instrument which are themselves portfolios, no? And the portfolio manager is the one doing all of the technical and the fundamental, the timing, and he has the patience, the expertise to do it for you. That's it. So that is it's a basket, it's a portfolio of stocks and bonds and combination of them. No? So very quickly. For example, if you just would like to invest in fixed income instruments, like this one, no? and you know what percentage of your money should be put in there and there, and when are you going to buy? Because all of this, even if they are fixed, they have fixed return, they are being valued every day. So the value of all of these securities would change every day because of the accounting treatment called marking to market, because of the international accounting standards, no? It says there, out of that thing that happened to Enron, all assets should be marked to market. And if you don't know that, even if you are invested in, let's say, 10-year treasury bonds with 6% interest rate, one day you will wake up, the value of that bond declined because interest rate went up, or vice versa. So it's sensitive to interest rates, no? Anyway, so there is a basket of those that you can just invest in, no? Medyo ano na to, no? Fixed income mutual fund. There is such a financial animal called fixed income mutual fund. So it make things simpler for you, no? Now, if you want to invest in those, you want to be a partner of Mr. Tony Tancacchio, or the Lopezes, or the Pangilinans, or the Ayalas, then you can invest in their companies. Now, again, the amount of investment is not really substantial when you invest it in a mutual fund, which is an investment portfolio containing all of those. Not speculative stocks, not second liners, but only blue chips. So that one. Now, what if you want to invest in both, so that when the market is up, then your portfolio is up, and so on, and vice versa. So you can combine that and just merely invest in a balanced mutual fund, which contains all of those two asset classes, stock and fixed income. Now again, the timing will be done by. So it's a mutual fund, it's a basket of stocks managed by a professional. So it's a vehicle made up of a pool of funds collected from many investors for the purpose of investing in securities. No? So this is how it works. So investors would choose, after identifying, checking their investment profile, would choose a fund. No? Depending on, this is also in line with your investment policy statement. No? So you choose the fund that is right for you, for your objective and your risk appetite. And if there are other investors like you, and a fund is there, a mutual fund with the same objective as yours. If you have a different objective, there's a different fund that would fit you. No? An equity fund, a balance fund, a fixed income fund, a dollar-denominated fund, a consumer fund, depending on your appetite and objective. No? So, and then again, the portfolio manager, this is an example. I will cite not a hypothetical example, this time a concrete real-life example. FAMI is a fund manager. Ayan na. So, that thing, the activities that I mentioned, fundamental, technical, and so on, would be done precisely to maximize returns and minimize risk. And whatever is earned, that will be given back to the investor. If, for example, this fund, one of these earns 10%, then your money, your, let's say, 5,000 pesos would earn 10%. Now, if you put your money in stocks, it could just buy 3 shares of PLDT. And if something wrong happens to PLDT, that's the end of your 5,000. But your 5,000, for example, invested in a mutual fund is as if you bought 30 blue chip stocks, or it is as if you bought treasury securities, no? If it is a fixed income fund, okay? So that is how it works, no? So if you invested 100 million, the fund earned 10%, you will earn 10% of your 100 million. So it's very, very, I call it a great democratizer. No? It's a great democratizer, because in here it gives small investors access to the capital markets, and it distributes wealth fairly. So you buy a mutual fund has a corporate structure. So the shareholders, investors would elect the board, and these actors in the play called mutual fund are being played by the different roles, no? Investment advisor, fund administration, distribution, custodian. The assets of the fund is handled by an external universal bank, custodian bank, and audited by an external auditor. So each fund has a price. You call it the net asset value per share. You buy at a particular price. You could sell at a particular price. No, this is at the behavior of one fund that we have, the most aggressive one. But look at the volatility. So this is the stock mutual fund. No, but the others are more stable than that, less aggressive. So there are professional fund management is there, which is required by portfolio management activity. Diversification is achieved. Safety of capital, no, and principal is there because of the regulation. No, mutual fund companies are regulated by 3 laws: the Investment Company Act, the Securities Regulation Code, and being a corporation regulated by the Corporation Code of the Philippines. Very liquid because you can withdraw anytime, no? And other than that, these are the principles of good portfolio management, no? And affordable also as low as 5,000. No limit, very convenient to invest. You can do it online. And you can know the price of your investment, the value of your portfolio at any point in time, no? Because of the daily pricing. And unlike any other instruments, capital gains in mutual funds are tax-free. That's the beauty of mutual fund. The only instrument very concretely identified in the CTRP of 1997 and the tax reform, tax exempt. All right. Anyway, so mag-advertise na ako ng konti. Just introduce ourselves. We are FAMI. We are owned by CAP and Maris. So we are a mutual fund manager. We manage different portfolios. We manage different mutual funds, no? And we are at the same time part of the Metrobank group because 70% is owned by First Metro Investment Corporation, the biggest investment bank in the country, and which is owned by Metrobank. No? So if ever, you will be in good hands and you can do meaningful banking. No? But we also are happy to serve. No? And yeah, what's the other one? So just a description of all the different portfolios. Now we said we are into this topic of investment and portfolio management. Now you can do it yourself or you can leave it to the experts. It's your choice, no? If you still have time to do it after doing all the capital budgeting, cash management, and so on and so forth, you can do it. But again, you don't have to put all your assets, your investment in a mutual fund. You can diversify. You can do your investing in time deposits yourselves, or you can do investing in other instruments, no? So just to give you an idea, these are the mutual funds that we have. It has been around since 2005. Our fixed income fund, our balance fund, we have our equity fund, we have also a consumer fund which only invests in consumer companies' stocks, which is very much, now look at the performance of this because of what happened, the COVID-19. The companies wherein this fund is invested in is in restaurants, no? In PLDT, Globe, telco companies. They're the ones that are being patronized by ordinary Filipinos these days. Pure Gold, no? RHI, Robinson's Retail, FB, Food and Beverage, San Miguel, and so on and so forth, no? So no wonder today it is the best performing, no? Mutual fund, no? So what I'm saying is these are portfolios. So it can make things easier for you. It can simplify things. You don't do it yourself, no? Okay. All right. So we are left with the last topic. This is now relevant to you personally and to your teachers. I hope you can cascade the learnings here. Or if you want, no, sisters, brothers, madam, and sirs, we can conduct a separate, if you want, webinar on this. And the audience are your teachers. If they have time, and non-teaching personnel, you can connect. And just I will discuss this too. No, we still have time. And look at what you are expected in here. This is so important. No, I am also into it. Connecting. Somebody's connecting. This. No. So the rationale behind this. No, because without an understanding, no, of basic financial concepts, people are not well equipped to make decisions related to financial management. People who are financially literate have the ability to make informed financial choices regarding saving, investing, borrowing, and more. So the World Bank made a research on this. That's one of their findings. No? And this is a household and personal finance. No? And this is one area, for me, this is one area of finance that each one of us should be studying. So I've been studying financial management, even financial school finance, no? Portfolio management, investment management, public finance, no, financial economics, no, securities research and valuation. All of those are studying finance and investment, but many or less are actually studying this area called personal and household finance, which is the art and science and craft of handling money properly. So you can actually be learning from this personally, your personal finances. That's one objective of this, no? The main objective. The second objective is you can cascade what you will be learning in here. Or we can actually do a webinar, more detailed presentation on this for your teacher and non-teaching personnel. So personal and household finance involves all the financial decisions and activities of an individual or a household. The practice of earning, saving, investing, and spending. So a household should be run like a school or a corporation. So the things that we've studied, school has this financial statement. A household should have also one. And it has for sure. Without you knowing it, you're acting on your income statement. You have your personal balance sheet, no? So we should be studying household and personal finance. The very reason why it is important, because only 25% of Filipino adults are financially literate. The Philippines is one of the 30 least financially literate countries in the world, with only 25% of adults aware of the basics of managing money. So only 43.8%, and 43.8% of Filipino people spent more than their income in the past, no? In the recent past. 51.5% spent as much as their income. Only 4.6% spent less than their income. So this should be the scenario. We should be spending only less than what we earn. No? But it's very difficult to learn, very difficult to do, unless you know personal and household finance. No? The craft of doing personal finance. No? It's not a science, not just an art, it's a craft. You really have to do it yourself. No? You do it yourself, you have to make your feet wet, no? In this area, because additional scary statistics, no? Only 42% of people like us, no? The millennials have not begun saving for retirement. 28% of people over 55 have no retirement savings, no? And for all those who retired, 75% of them are still dependent. dependent on Social Security, dependent on their children, no? Dependent on SAP, dependent on what? Social Amelioration Program. 23% of the retired are still working. They should work. They have to work, no? To sustain their, expenses, medicine, food, and so on. Basic. Only 2% of retired are actually retiring their retirement days, no? Remember, we still live, no? How many more years from the time we retire? Let's say at 60. So the life expectancy is, hindi ko alam kung humaba o umigse dahil sa COVID, no? Pero bago yung COVID, mas mahaba nga ang buhay ng mga babae, no? So we also found out that many Filipinos, they lack financial literacy. This is really the reason. Some of them would even fall victims to scams. And a lot of them cannot access the capital markets. So when I say capital markets, they cannot access, they don't have enough money, and they do not know that they can invest in the stock market. They do not know that they can invest in treasury securities in the bond market. No? It's also a matter of mindset. No? So this mindset, almost everyone has a big expenditure in mind. All of us are aiming for something very, worldly, and, the latest gadget and so on. No? Most Filipinos wants, they seem to be urgent. We make them urgent, no? I want this, I want it now, and I want it big, something like that, no? And most of Filipinos, they think that borrowing is a solution. So it's just like a quicksand, no? When you borrow and borrow, wala yung dapat taga London, eh. Dapat siguro taga Ilocos o taga, ano ba ito yung isa mo raw, meron pa isang place, eh. Doon sa South, sa Visayas, so, no offense, no? Kasi it's a good habit, saving, no? Taga Bohol yata, Boholano tsaka Ilocano, magaling. They save well, no? Better, no? So, just like any other, financial topics, there is also a science in personal finance. We call it the personal financial planning. And it's a process of determining one's financial situation. So you determine your needs, your goals, and then this thing, it guides you how to address all of those things, no? Mentioned to achieve your goal, to achieve your personal financial goals and objectives. Just like your school, a corporation or an enterprise, to achieve their goals, no? Remember, we talked about very roughly, I just scratched the surface of strategic planning and forecasting. So financial planning and forecasting. So the different areas of financial planning that we have to contend with, ourselves being, let's say, the breadwinner of our family, saving and investing, we should be mastering that. Insurance, we should have insurance to also, when we get married, for those who are not yet married, to provide for the education of our children, college education. These days are expensive, no? And then we also do retirement planning. So I've shown you statistics and that, no? Estate planning, when you relinquish or you relinquish your money, your assets to your children and so on. So there is a process to it. Now I would like you to, at the end of this, after this presentation, check your present financial status. You check your personal or your household financial statements, no? Now you know that. You know how to do it. You check your personal statement of asset, liability, and net worth, which is your balance sheet, no? You check your household income statement. This you can check over a year, over a month. You can do it even more frequently than annually. So check what's in there, what's coming in, what's coming out. You set your financial goals. So this is just like household financial forecasting and planning. So again, you have SMART goals, then you begin to save and invest. So these are very challenging activities, saving, no, and investing. So before you can even save, you have to handle your debt. So there is a lesson, a separate one for this, how to handle debt properly, how to become debt-free. So that can be included in a module for teachers if you want. No? Spending habits should become the culprit of us not being able to save, no? And the issue about needs and wants, no? And the absence apparently of a program, the self-discipline, and the vehicle that would make you save and invest to achieve your goals after you've considered your financial condition. So you can see this is step by step, very scientific also. And then just like any other corporate or school plan, you monitor your household plan, financial plan, you review them accordingly. So I know you know better also what should come into your asset, because each one of us, depending on whatever assets we like to put our resources in, so savings, retirement account, and so on, the house. So you check this, because at the end, you would know whether you owe or you own, no? Many Filipinos, they have negative net worth because the total of their assets are much greater than their total liabilities are greater than assets. So negative net worth, bankrupt individuals, bankrupt household. No? Kasi pag corporation, bankrupt yan. Negative net worth. So why do many people fail to save? Lack of disposable income, little or no knowledge about better investment instruments. That is why financial literacy seminars like this important. And they have no access to better investment instrument. What they know is the savings account, at the most time deposit, no? And this is crucial, the discipline. The lack of discipline among Filipinos. That's why we are number 29 actually of the 30 countries. In Southeast Asia, we're second to the last. We beat Bangladesh in terms of financial literacy. So only that country. No? Another investing myth, saving and investing for many, for Filipinos, it means to us financial sacrifice. Ang hirap naman yan, hindi ako kakain, hindi ako mag-Starbucks. No? Hindi ako kakain sa labas. Or I will just delay gratification. I want iPhone 11. So my iPhone 10 is already old. No, I want iPhone 11, no? Something like that. So you delay your gratification before you even think of purchasing. Why not delay it? Incubate the idea. At the end, you will realize, you will be pleasantly surprised that you don't need it anyway. Because many of those are just, temptations, no? Temptations, and because of peer pressure and other things, we tend to spend unnecessarily. So savings result to financial freedom. Yung mga utang, debt, yung mga taga-London dyan, they will sacrifice, no? Anyway, and this is the wrong thing being advocated by so many financial guru. Sabi nila, mali daw yan. Pagka-receive mo ng salary mo, gastos ng gastos, kung may matira yun sa safe. And more often than not, negative to, walang natitira. Yung sinasuggest palagi, and this requires discipline. If you receive your paycheck, you set aside, earmark savings, X% of net take-home pay should be placed in a savings account or in an investment. And what remains should be for the expenses. Because may mga expenses naman, paano yung kuryente, tubig, pagkain. No? But I'm sure if you take a look at your expenses, dive deeper into it, you will see that there are unnecessary items there. No, many of them are just merely wants, not necessarily needs. No, so financial discipline that will result to wealth. So it's not a matter of how much money you earn; it's how much money you save. Even if you earn 6 figures in salaries, if you are spending more than that, A janitor saving, earning let's say 1,000, whatever, minimum wage, saving 100 a month is better off than an executive, no? Spending all of his income, leaving nothing or negative pa nga, no? So that one, a matter of discipline, no? No matter how small it is, it will amount to something, no? Just like a snowball rolling from the mountain, no? As it rolls down, it's getting bigger and bigger. So why don't you do this? You segregate your needs and wants. Enumerate all of your expenses. And honestly, objectively, look at the item. Is it a need or a want? If it is a want, then can you get rid of it? No? Because he who needs the least has the most. And according to the poet, Mr. Henry David Thoreau, you can make yourself rich by making your wants few. So there's so many temptations these days. Good thing that there is a lockdown. The malls are there, they're losing money. Good for us because, you know, it's a source of temptation. No? The midnight madness, buy one, take one type of things, no? So where can you cut down on expenses? Again, from here, because you cannot apply the formula income minus savings equals expenses. Because more often than not, it's always negative. So the only way to look at it and for it to become positive is to reduce your wants, no? So you list down there, no? That's one of the things you have to do. Check your financial balance sheet, check your income statement, your cash flow, no? So some ways to save. You have to place your money, your savings in a place quite hard to withdraw it, no? You don't put it in savings account and here you have your ATM. So there are thousands of ATM machines, no? And it's easy to withdraw. Pag niyaya kayo ng inyong barkada, office mate, co-teacher, no? At after class, then that's the end, no? 2 bottles of beer, eating in a restaurant, no? And your saving should be easy on the pocket at the very beginning, no? So don't just decide right away to save 50% of your net take home, no? Baka 2 beses na lang kayo kumain sa maghapon, no? Anyway, automatic. If you can do it automatically, then so much the better. Kung sa bangko, ATM, yung inyong sweldo, pwede niyong sabihin sa bangko, automatic, you program it, you enroll in an automatic investment program. That's possible, no? Get rid of unnecessary spending, no? Get rid of them, no? Yung mga spur of the moment purchases, ito rin. Nadadamay lang, na-influensyahan lang ng kaibigan, no? Anyway, so, you should have a target, you should have a goal para may gana naman mag-save at mag-invest, no? There are short-term goals, there are medium-term goals, there are long-term goals. So all of this you can classify according to that, no? And with a budget, with a target, then you will be influenced to save and to invest to achieve a target, no? There is reason. There are reasons for you to do that, no? So the power of compounding. So you really have to appreciate this, no? Money begets money. Interest earns interest. So that's one secret in investing. So your money would earn money. So you can access the capital markets, no? Don't just put your money in savings account, no? The investment vehicle, there should be there, no? The discipline, no? The program. The monthly investment program. So that one, no? All right. So this one, good thing, again, in FAMI, we thought about it. So we did not create the problem. That is an existing problem and concern. We created a solution. We created a solution. I just closed the door. Baka sabi ng misis ko where's that talking? Anyway, so MIP, monthly investment program. We have that as low as 1,000 a month, 500 a month, no? And you can invest that in a portfolio. You don't have to do the technical, fundamental analysis, no more time, no more expertise and experience. leave it to the experts, no? Other than institutional money, we have their individual, no, the teacher's money. So I will not delve into this in detail, but the point is to operationalize your plan. When you finally decide to save and invest, the vehicle, the program, the discipline. And this would make that easy for you. Pinag-aralan na ho namin yung MIP, Monthly Investment Program. You choose the fund that you would like to invest in. A good number of them, Filipinos, are enjoying this because they are a little bit financially literate now, or they are full-fledged financial literate Filipinos. No? So we created the MIP because, other than the reason cited, only 1 out of 10 Filipinos save for retirement, and the average savings that Filipinos has would last only for 2 months. And we should have an emergency fund, no? That emergency fund that you keep on hearing advocated by financial gurus, no? It's so important. You realize the importance of that these days, no? If you don't have that, many people won't eat and won't be able to provide for the basic, no? Anyway, so that's the one, emergency fund, always. So salary deduction, that's the MIP, no? The salary deduction, very convenient. So this vehicle should be very affordable and would be able to help you achieve your goals. No? Okay, just for you, an illustration lang, no? Illustrate ko lang ho ito. For example, you invest in one mutual fund, let's say an equity mutual fund giving, let's say, 15% per year. You invest 1,000. I will also show you here the mutual fund, a portfolio that would earn a balance fund, 12.5, fixed income 7. This is just for illustration. No? This is just for illustration purposes. So after giving 1,000 a month, initially 5,000, you paid 65. At the end of the 5th year, no, 98,000 if that is invested in equity fund. No, again, this is just for illustration, and that could have been 91,000 if invested in a balance fund, 78,000. So what if you continue to save 1,000 a month for 10 years? So you would have shelled out 125,000, but that's 291 already. After 20 years, 1.5 million. After 30 years, 7 million. So imagine that. For illustration purposes only. What I'm saying is money begets money. Interest in here is earning interest for you. And you are continually parang putting gasoline on the fire. So it's growing and growing, something like that, no? And what if you do 2,500, no? So that one would even give you as much as 17 million after 30 years. So, yeah, if you have 30 years to spare, no? Anyway, so just to personal and household finance, no? The learnings. One of the teachings, you should start early. Start saving and investing early. If I ask you, when is the best time to invest? So most will answer today. But the better answer is yesterday. So the second best answer is still today. So we still have the best second answer, and you can still do something about it. Know your objectives. So you have your long-term, medium, short-term objectives. No? And actually, you prioritize your objectives and address each one. You can come up with an investment to each of the objectives. Could be one by one, if you can afford it simultaneously. You have different buckets of investments for different objectives. And always have the right mindset. Many Filipinos, it's too late already. There's nothing left to my savings, to my income. So I cannot anymore save. No, I don't know the capital markets. No one would help me do that. No, so know your risk profile so that you can invest in the right fund, in the right investment outlets. And another key is the regular investing. If you do it just one time and you leave it, no, it won't grow. as fast as it should. So invest regularly.